And we
But
have
yeah,
a,
the recording has started.
oh, okay,
Good
perfect.
thing I didn't say anything bad. So I have 10:02. I'll call the meeting to order. First item on the agenda is approval of the minutes. Has everyone had a chance to review them?
Yes, so moved.
Okay, thank you. Can I have a second?
Sure.
Second.
Was that Becky?
Becky.
Okay. All those in favor?
Aye.
Aye.
Okay, anybody opposed? All right, the minutes are approved. Oh, did anybody want to abstain? Okay,
No.
minutes are approved. All righty.
All right.
Oh, I've got an echo.
It's Tony.
Okay.
I'll put 'em-
First up on our agenda is Brooklyn. Do we have people from Brooklyn here? If you want to put your cameras on, and maybe we can see you.
We're down the corner here.
Yep, Brooklyn's with us. We have.
Okay, there we go.
Yeah.
I see you now.
Thank you.
Okay, so you sent us an update. Some things are looking good. I would like to hear from you a little bit more about the internal controls that, the repeat finding from fiscal 19 was again in fiscal 20. Yeah, it was repeated for fiscal 21. What, can you give us a little bit more color on what's missing in their opinion? Is it just the WPCA issue or is there something else?
No, so it's basically the amount of adjusting entries the auditors have to do at the end of the fiscal year. But I'm going to preface that the amount of entries that they did for this fiscal year 21 was greatly reduced. So we're making great progress and how we're recording things. We're recording things accurately. It was just amount of entries that they had to do in order to clean up our records.
So they wanted you to do them instead, or were they saying that there was something going wrong that were causing you to need to do them?
I mean, there was just some confusion in how we were recording things, and to clean things up, they had to do what they consider an excess amount of adjusting journal entries. But we have good connection. We have good relations with the auditors, and we're seeking guidance on when we have questions on how things need to be recorded. I feel that, and they really do feel that for fiscal year 22, that finding will be eliminated.
Okay. And I noticed your OPEB liability has grown. What's going on there?
That's something I'm not sure that I can answer.
Okay.
I'm sorry.
All right.
Yeah.
The other question I had, at least looking at your fiscal 21 audit report,
Yeah.
you don't have a fund balance policy in place. Do we have any plans to get one in place?
Okay, so we didn't have a fund balance in place for fiscal year 21, but there is a fund balance policy that was approved in October of this fiscal year, which I can forward on to you all so that you can see it.
Okay, that's cool. All right, that was all I had. Tony?
I'm all set, thanks. I don't have any questions.
Mike?
Just if you can comment on the update. So certainly fund balance is moving in a good direction. Looks like it was reported at 1.5 million for June 30th of 2021. Do you anticipate adding to fund balance as a result of the 2022 operations?
Yes. Part of our policy that we developed was to get us 2 years into it, or at least working towards it, then we'd work farther on it. But that's a goal of the Board of Finance, is to build it back up to the level that desired.
Okay. All right. And how are your budgetary projections looking through March 31st at this point?
Most of them are pretty much in line. There's a couple small items naturally are over not on small budget items, but most everything's pretty much what we expected in line. I don't think we have a lot of discrepancies.
Okay. And it looks like you're submitting your proposed budget for next year on April 28th
We're submitting at the Board of Finance. The
for
town,
finance, and then
the
Board of
town.
Selectmen on May 3rd.
May 3rd, yes.
Okay. Anything to highlight in the budget that's been proposed?
Not really. There's no, the only big, the biggest change probably is in the salary and administration, because we're looking at putting on a new person in the finance department to deal more with the town issues instead of having a joint finance director. We'll have more split duties, and then transferring some of the present staff more realistically allocating which department they're working in. So it's going to be a large tick in the administration part in the town budget.
Okay, thank you.
Diane?
I'm good, thank you.
Becky?
I'm returning to the OPEB question raised earlier. The numbers have really bounced around from one year to the next, and according to the reconciliation, the big bouncing is differences between expected and actual experience, which indicates that maybe the actuarial assumptions are not sound. You shouldn't have a number like that bouncing around plus or minus 30% from one year to the next. So I think that is worth having a conversation with your actuary about.
We can check.
Nothing.
We can check with Hooker and Holcomb and see what they have to say about that. I was unaware of that.
Mhm.
Yeah, they might be able to give you recommendations on how to stabilize.
Okay, thank you.
Glenn?
Well, while we're on that topic, before we leave, Kate, may I ask
Yep.
a question?
Go for it.
It's Kim. Becky, did you look on page 61 of the audit report, since you're far more expert in this category than me on the audit report? They're showing investment return is the 7%. Is that what they're anticipating, or that's what they actually, that was part of their assumptions? Isn't that
That's
too
right,
high,
Kim.
Becky?
That strikes me as being very high.
Okay.
Notwithstanding that the return for fiscal year ending 2021 was 26%, which is shown on page 62, but an assumption of 7% that the investments will return 7% long term. There are very few asset allocations and very aggressive ones that would support that assumption.
Yeah, so that could then hurt you in the upcoming year if you're continuing with that assumption.
Right.
We review that quarterly with them, and
Mhm.
not sure.
This isn't your actual investment returns. It's the assumption the actuary is using about future investment returns, and a rate that's higher than what you can realistically expect to earn long term is just pushing costs onto future generations.
I understand that.
Yeah, because if you look at page 62 and you see what your history is, you've had two very good years,
Mhm.
and then 1, 2, 3, 4 of the other years don't meet that assumption return. One of them was actually a loss. So it's, it'll have a budgetary impact making a change like that,
Mhm.
but it might provide for greater stability for you in the long run.
And I think it's really important to have a realistic, solid, conservative even measure of liability. There are other levers that could be pulled in order to not have it unduly impact the budget that could be explored. But my first recommendation is always to make sure that your assumptions are as solid as you can make them. And I don't think 7% really stands up to scrutiny.
Okay,
Okay. We will review it.
Okay, Glenn, did you have anything?
I have nothing in addition to what's been asked.
Okay, Kim, did you have anything else?
I do.
See, that's why I leave you for last, because I know you always have.
Sorry. I noticed that you have a material weakness as well as a significant deficiency in both your federal and your state audit findings. And those descriptions go back to some of them to 2019. And it wasn't, I don't think, just the adjustments, because they're saying that it was an internal control and that you would need to implement policies and procedures. So my question, and I think it's about around the reconciliations, do you have policies and procedures already in place, or do you need to implement them? So it wasn't clear, because the finding was stating that you have an internal control and a material weakness, and it looked as if there were some reconciliations in bank reconciliations, correct?
That has been addressed. We have a bank reconciliation policy in place. There was on two of our bank accounts, there were variances that have been ultimately, they were addressed in fiscal year 21.
So maybe,
Kim, maybe if we could get the auditors to give us something specific so that we can know that the internal controls, that what specifically were they concerned about?
okay.
And that way we can get a sense of how significant they are and address them one by one with the town to make sure that they've been addressed.
Can the town, can you request that for us and get that sent to us?
Yeah, so you're looking for just their findings, and there's only two findings.
Right, but with the one finding is that the town should have internal controls over financial reporting that provides reasonable assurance that the accounting records can be relied upon, blah, blah, blah. What specific controls did they feel were missing? Was it proper authorization of invoices? Was it, reconciliation of bank accounts? Was it monthly reporting? They're not telling us specifically what controls were weak.
Isn't that what you've been trying to get from?
They should be able to do that. It really should not be an issue.
Yeah.
Who's your auditor?
King and King.
Oh yeah, they're, we've met with them before. They should be able to do that. It's not a
I
problem.
think they may be more accessible after April 15th deadline.
That could be.
And that is fine.
Yeah.
So how would you would you just like me to communicate that through an email to you, or at the next scheduled meeting?
An email would be great.
Okay.
You can send that to Bill and myself.
Okay, I will do that.
Thank
and then
you.
we'll get it out to the commission.
Okay. Should I send along the copy of our fund balance policy to you too as well?
That'll be great.
Okay.
I do recall the first selectman mentioning that. That is all I have today.
Okay.
Okay.
All right. Yeah, if you get us those couple things, I think you guys are, I feel like you're on a good track. So thank you.
Thank you.
So then I think we're good.
Okay.
The next on our agenda is Derby. Is there anybody here from Derby? I'm not recognizing any names in the list. Do we have anybody from Derby? If you were here, please speak up. Okay.
Mayor Zeekins here,
Oh, okay.
Derby.
Thank you.
Sorry, I'm on the phone. I tried to figure this thing out. But
Kate, I also have to point out that they're a client, just for, disclosure.
Yep. Okay. So, had a couple of thoughts and comments from your update. Yeah, I do find it concerning the staffing issues in your finance department. That's an just a blanket statement. Looking down, your healthcare insurance. Do you guys work with a consultant, a benefits consultant?
I don't have my finance people here, so if you have questions, you're gonna have to put them down and I'll have to get back to you. I don't want to say the wrong stuff.
Okay, I'm just, we have, a lot of places have an agent that helps them place the medical insurance.
I
And
have a broker.
yeah, okay.
That's what
So
you
you
mean.
have a broker?
Yes.
I have to say, I see, the increase in your budget. Are they aggressive for you in arguing rate increases like that?
Like I said, we've had meetings. They were going back and forth. Like I said, I'm not really good on the terminologies that you guys use, so I really like to stay limited on what I say.
Okay. All right. Well, so here's, just my thought. And I think if it's just a broker you might want to consider at some point a consultant who will be able to get your claim information and analyze it and evaluate it on a regular basis. And they can help you when the carrier comes in and proposes a 20% increase. They can argue with them with a lot of data and detail and experience and be able to say, well, that is not justified. And, they can also help place your insurance and bid it and stuff like a broker can. But you really need somebody who's going to be your advocate with the insurance company, who knows what your claims history has been, and can say things like, well, that 20% increase is not justified based on our history, or, there have been some blips. So, it's something you should consider looking into. The other comment I had for you, compensated absences, I don't see as OPEB. If you have that, you say this is a statement, and you might need to get with your finance people, but in the report it says that your compensated leave is more commonly referred to as other post-employment benefits. If you're talking about paying somebody out vacation at termination, that kind of thing is not OPEB. OPEB is benefits that you offer to former employees after they have left, such as medical care. So, you want to rethink how that is being treated. It is a difficult thing to project, and can cause wild swings in your budget. You might want to see if you can have a trust, or some segregated fund balance that could help you manage compensated absences, but don't see it being treated as OPEB. Do you know how you're doing with the Board of Ed bank recs?
The
Are they
last
being-
I heard, we've been waiting on them. Everything in the city side is done, and WPCA is done.
Okay. Okay. And one of your old audit comments had to do with interfund transfers. And just one in particular I picked up on that said that you closed them all out except for the middle school one because there was not enough money. And you do have to close that out at some point. So I was wondering what the resolution of that has been or will be.
Okay.
Okay. Tony, do you have anything?
I do. I guess I want to reiterate your comments that I'm very concerned about the staffing issue, and that we were concerned that you had no deputy or assistant finance director to help. And now you don't have a finance director.
We have an assistant right
Do you have an assistant right now?
now. Yeah, we hired a part-time.
A temporary.
So it's a part-time temporary. You don't have a full-time assistant finance director, and you don't have a finance director that's actually working at the moment, correct?
Correct.
So that's
We've been actively searching, but as you know, the field out there is very slow.
right. That's obviously my biggest concern. I think I had a couple of concerns on your revenues and your budget proposal. I guess my first question or concern was that the actual column in the budget didn't match for 3/31/22, didn't match the report. That was 3/31/22. I was looking specifically at the prior year tax collected and how your budget went from actuals went from $1,200, $540, $3,000 to $200,000, and why your supplemental motor vehicle taxes went from $300,000 to $1 million. Those were my questions in the budget proposal. I don't expect you can answer those, but just generally some of the revenue lines I had some questions about, but there's no staff here, so I don't know what those answers are. And also, just generally, we like to see cities move forward. We don't seem to be moving forward here. So that's another concern of mine. We're all advisory to try and help, and I just don't, it doesn't seem like we're moving forward. So those, I guess, were my comments and concerns.
Yeah, Tony's raised really good points. That dramatic increase in supplemental motor vehicle. I know prices of cars have increased, but
20% maybe.
yeah,
This is up 18%, not 2.5 times.
And the prior year tax collection, without any evidence that unless you've got something specific that you expect will be collectible, it just calls into question the reliability of your budget estimates. Mike.
Just a question, and I apologize if this was covered previously, but I'm seeing in the documents that the audit extension for June 30th, 2021 is the requested extension was to April 30th, later this month. Is the town on track to submit its audit for April 30th?
From the information I'm getting from the auditor, we just need the information from the Board of Ed, who recently lost their business manager. And I know they've been working, the auditor's been working with the Board of Ed. The city and WPCA side is complete.
Okay.
Who is the auditor?
John.
Maybe John Accavallo.
Okay,
There you
thanks.
go.
All right. Okay, Diane, do you have anything?
I don't have anything new to add. The only thing I will say, I agree with everything that Anthony, Mike, and you had said. Very concerned with the staffing. If you look at what's happening on the city side, but also on the Board of Ed side, I think there's not enough staff to get on top and address all of these issues. So I think that's a huge concern on my part. And I also agree with Anthony that we're not making any progress.
Okay, Becky?
I don't have anything else.
Okay, Glenn?
I have nothing in addition. I think Tony touched on everything. I guess my concern is the staffing, and is there, I know you're trying to find somebody, but it seems like it's kind of like running on the treadmill, and not having the right people in place to do things, it seems right now. So I guess the thought would be is, or the only question would be is, what's the plan going forward? You said you were hunting for people, which was fine and all, but I guess that also becomes, what do you do in the meantime, and who's actually watching the financial situation for the city?
Correct. We've interviewed several for the assistant. We have a temporary in there now. Chief of staff is assisting next door with the finance department. And like I said, I wish one could just drop out of the sky for us, but it's such a tough field, as you guys know. And we're doing all we possibly can over here to get someone in here.
Understood. Kim?
I just realized I was on mute. On that same theme, Mayor, would it be helpful if you seeked a professional firm to come in for a period of time to help wrap some of this up? Because you've got a long-standing history of these lot of open audit findings that have not been closed, and that hurts you. You also have the audit that isn't getting completed, and you're saying the city side is done, but the Board of Ed is not done, and I understand that's not in your control, but any power that you have to get them to get it done, it will be a benefit to you and the city. I do not anticipate that it will be completed by the end of this month. That's my own personal opinion. I don't see that happening if they were still working on bank reconciliations at the Board of Ed. And if you did need a professional firm to help out, I'm willing to offer you some connections that we have, with Robert Half or other professional financial firms that could help in the interim till you can fill that position. I know that you might look at it from a financial perspective, but I don't think that you can afford, and I don't mean money, to not have somebody there. It's mentioned, Walter mentioned in his response that you put the money in the budget for a new system. Unless the financial infrastructure is there, there's no way you can put a new system in. I would be fearful of putting a new system in without having, a new finance director there or a finance director there that understands the city, understands what they're taking on, and all of the a lot of work here, but also to be able to put a new system in, which it's like it's too much, and you got a whole cake and you got to eat it all. Well, you can't. You got to take a bite off at a time, and so I do think you need some help to do that, even if it's just for a 6-month period, something to get you to transition. That's my my thoughts. I did notice also, the same as Tony, that some of your budget in the new year, the numbers didn't look to be in a line. So they seemed off, as well as your budget I call it the budget to actuals. The actuals are not the same in the budget as they were in your monthly statement. I know that Walt was throwing us these reports at the last minute, and maybe he didn't look at them to see if they tied or not. But I just want to bring that to your attention, Mayor.
Thank you.
I'm going to throw one more thing at you. Just going back to your update again, the comment about the 53-week police payroll. So a better way to handle things is you should not be paying based on the pay date, or you should not be expensing based on the pay date. You should actually be expensing based on when it's earned. So every year you should be having payrolls that are like 52.2 weeks or 52.3 weeks, which helps smooth out the year to year over time. It can be a little bit of a pain in the neck for your payroll people, but it's the appropriate way to be reporting your expenditures based on when it's actually earned, not when it's paid. And that would eliminate the 53-week the occasional 53-week issue. So that's something for you to address when you get a finance person in place.
Thank you.
Okay, anybody else? Any circle back on any comments? I just, reiterating, you're not making the progress you need to be making. And I think, we're going to have to give some consideration to whether you stay with us at the MFAC or whether it's appropriate to move you, recommend that you be moved to the Municipal Accounting Review Board. So I want to make you aware of that. All right.
All right. Thank you.
Thank you. Hamden, I believe I see that the mayor is present.
Good morning.
Good morning, Mayor.
Okay, so I have with me today our finance director, Curtis Eatman, and our deputy finance director, Rick Galarza. And I believe on the line we have David Capoletti, our auditor. And so I'm hoping that he can go through the audit with you, any questions that you might have, and then we would like to discuss some of the ways that we have addressed any concerns and findings in my budget.
Okay, if the auditor, are you on? If you can just give us some high level, like management comments, any significant findings?
I am. Dave Capoletti here. Do you want me to start, or Mayor, did you want to start with your presentation?
I would like you to start.
Okay.
I see some significant findings, so let's talk about those.
Yeah, okay. So we'll start with the findings that are reported in the single audit. One, we're continuing from the 2020 finding on the pension. So this year we found that the operations of the employee retirement plan do not follow the policies and procedures of the town. And so this is on page, just so you could follow, excuse me, 10 of the single audit booklet. And down below, I list some of the problems that we found because of the internal control processes weren't being followed. One was obviously they weren't able to complete an actual report. We also included OPEB, but this is more the pension wasn't completed by the year end. That has been completed now for on March 31st, so we do have a copy of that. And then also, during our procedures, we found that $250,000 of contributions to the OPEB ended up into the pension fund. No one caught it until the audit came around. And then finally, we found that there was payments being made out without any approval or any services being provided. I don't know what the contracts or the...
Debbie, the custodian, would you please come to the town clerk's office? Debbie, the custodian, W. Smith, in the town clerk's office for you.
I muted them.
Okay. All right. So
we're all going to the town clerk's office.
Okay.
I apologize for that. So I'm at another town right now.
Oh, I apologize. I turned you off. I thought you were somebody else.
Okay. So, I mean, finding those, 4 little things, not little, but some of these things here, we're finding that there might be an over a generalization that the internal controls in the pension funds are just not adequate. And we recommended that that someone be involved in the finance office to, approve invoices, approve contracts, and making sure that they're running the internal controls. The internal controls of the town generally run well. It's just when they're not following the procedures, they don't run well. And so I don't know if someone at the town wants to follow up with that now, or
Well, I think that's important. Just looking at a $250,000 deposit being put in the wrong place is, indicates that there's no reconciliation happening, which
Exactly.
is, problematic. And the services, $5,000 doesn't seem,
Exactly.
it seems immaterial, but what is the internal control issue that is missing that payment was made?
So invoices are approved at the board level. So they're provided to the board, and the pension board would approve these invoices to be paid. But there's no, and I think the board members are assuming the internal control process is being followed before it gets to that level. We're just asking that, that was procedures. I mean, like I said, the town does have proper procedures. They do follow them in other departments. There's no reason why they shouldn't be followed in the pension.
Okay.
And I think that's probably correct. It's fixed, and I think it used to happen. I'm not too sure. I've only been involved in the pension for 2 years now, but I think with the changeover in the finance office, things have been let loose or has just not been followed.
Okay, and you probably haven't done anything for the work. It's too early to have done that.
I'm sorry, the what? To do the what?
You haven't done any preliminary work for the 2022 audit yet.
No, so what we do though is we do a separate audit for the pension board. And so, we wanted to wait to have that complete, and we just did. It's in the draft now and will be completed, because remember, they do have a pension bond outstanding.
Mm-hmm.
So there's certain requirements we wanted to make sure happened on an annual basis, specifically the valuation, which was due this year, that wasn't done. So like I said, the valuation is done, and it will be included in an audit of specifically the pension. So we'll be finishing that now and presenting that to the board. And then, we haven't followed up with any preliminary procedures for the 2022 audit. Correct.
Okay.
But we are having contact with the board, finance board, on some of those issues currently.
Okay.
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 If we move over to the general government, and like I said, is that there's some things, as you look through the budget to actual report, you see some favorable things, and so there's some unfavorable things as well. And, unfortunately, your auditors just like to pay attention to the things that are unfavorable. And so we'll go through some of those things. We're still concerned a little bit with the general fund balance. And so this is we're still concerned the general fund balance and the idea that they may potentially be funding the balance on bonding, issuance of bonds, or instead of a sound budget. And specifically, so what we did here with and I'm onto the management letter for those who are listening, is that in past audits, we had a problem with some of the variances between the revenues, and that they weren't substantiated. And I think that the town and the board have made significant progress in that area. And I just did want to mention some of the things in the management letter that probably they need to look at a little bit further. The first one was the property taxes, which had a good variance, I think, in everywhere except that where motor vehicle was included. And so I think maybe the calculation was maybe just take a look and make sure they're doing that properly. But the variance last year was $3 million. This year is just $923,000. So I think that was a favorable move, but it's still $1 million off. So this might be something that they can improve going forward. And then the other area that we've asked them to take a look at is the miscellaneous expenses. And historically, there's been programs that have, in the budget process, would be revenue generating, but would never even move forward with any expenses. And we're still seeing that with the Quinnipiac PLIT program, which the Quinnipiac has historically not paid this portion, or when they have, they've taken it out of their private duty payments. And then the second thing, let's see, they still do have a line item in there for the reimbursement for the bonds, but they haven't reimbursed from the bonding programs in 2 years. So, I mean, we just want to take a look at that when they're doing their budget. We will also let you know that, the increase in the general fund balance, I mean, they had an increase this year, and it's no longer a negative fund balance, which is nice. The deficits of the the negative variances in the general fund revenues, though, were offset by really the bonding activity. So we're still seeing that one-time items are making the general funds sustainable. And like I said, with the position they're in, and as we recommend that they increase the general fund balance, we also want to see a sound budgeting where current revenues meet or exceed current expenditures. And so I think there's a little bit more work for the town to do on that.
Okay, thank you.
Yeah, no problem. And moving forward, the capital projects, and again, like I said, a lot of these things are coming up to play because we do have a little bit of a high risk because of the low general fund balance. And one of our concerns is it being reported properly as far as are they trying to, or is it just happening where deficits are being put into other funds and maybe should be future general fund liabilities that aren't reported. And so we look at these a little bit, and we do go over a little bit of the how the bonding has worked and how they've done it in the past and what they haven't done now. And like I said, they didn't have any reimbursements for indirect costs on bonds this year to the general fund, which they normally did. The other thing they did in the past is they would run bond programs, special public work programs are bonded through the general fund. So they haven't done any of that this year. Which, like I said, showed some of their deficits, variances in the general fund. But there is also some unfunded programs that we're keeping an eye on. One is the insurance risk fund. And to give you a little bit of history of this, obviously a tornado went through the center of Hamden in 2018. They have an emergency approval of bonding, which needed to go to bond within 2 years, I believe, but they missed that. So we still have a little bit of a deficit in that tornado risk fund that now needs to be funded by the general fund. And we're just looking to that to be funded over several years. I don't think it needs to be funded in 1 year, but it could be funded over several budget years. The other item here was the ice rink was pulled out of the general fund in 2019 and started having significant losses where, general, again, we're seeing that revenues weren't meeting or exceeding expenses. And we wanted to keep an eye on that as well. They did make some changes in the last 6 months of this year on that fund. So it should be good moving forward. But, which basically was, we reported it in 2020 audit, and they did make some corrections at that time, but still showed some losses for the first 6 months. But hopefully that'll be corrected. Let's see. And then moving down, we're just going to, the other area, like I said, we're mentioning some of these because of the high risk of the general fund. And there's a process. So basically, what might be different with Hampton compared to other towns is that the town itself picks up the fringe benefits of the Board of Education, and then the Board of Education will reimburse a portion of those. And that's an amount that we're always not waiting for, but comes after the year end, and it doesn't really have any substantiation of what that number is. So it's almost as if, at least that I know of. So we're asking that they take a look at what the actual fringe benefit calculation is in the general and in the Board of Education, and to compare that to their reimbursements, and also compare it probably to some of their grants that are not reporting that amount. So we're looking for some counts. This is another area, because I know I have a new administration, not only with the mayor, but there's other new people in the town of Hamden. As they're making their budget, it's very easy to compare the number to last year and say, okay, it's the same, so everything moves forward. But I think there's some areas in there that you could probably just take a better look at and to say that there might be a better way to look at some of these expenses. So it's just an observation more than a finding.
Okay. Thank you.
No
Thank
problem.
you.
And then let's see if what we're missing here. We go through that. The unfunded programs. And then I wanted to just update with, like I said, we're concerned that with the general fund deficit, is that being spreaded, and specifically not into other funds, but are they not keeping up with their obligation to pay their long-term debt? Are they pushing it down the line further? And obviously with the increase in their requirement of bringing their pension to the current ARC payment, which with conversations is supposed to exceed 30 million. Is that being compromised by not paying off their long-term debt? And how is that? Is it going to put the town into a situation where, the big fear here, money has always become pretty easy in the state of Connecticut for bonding purposes. But if there was a situation where it becomes difficult, and as their bonds grow higher and higher, is that going to be a situation? But I mean, so what I just wanted to show the town is that when we add the net pension liability and the debts together, we're seeing some improvements. So we are seeing that the overall debt is slowly moving down. I mean, this is a debt that took 20 plus years to generate, so we can't expect this to be paid off in 1 year. But I think the idea that the town continue with a long-term debt plan, including the net pension obligation and the debt together, to reduce this debt over time, so that the general fund becomes a little bit more capable of sustaining a stabilized budget. And I think that goes through most of my findings.
Okay.
If you have any other questions.
Yeah, on that, and the insurance where you were talking about the tornado, what fund is that? What fund is that accounted for in?
Yeah, that's they have a risk fund, and so it's part of their non-major. So that would be in the schedule.
Okay,
So
thank you.
Yeah.
All right. Okay. Kim, if you could unmute the mayor. Maybe we can start talking about what steps you have taken with the pension to make sure that those internal controls have been addressed.
Sure, thank you. So what we've done is taken the supervision of the pension out of HR, and this next budget for fiscal year 23, we'll be putting a junior accountant into finance to oversee the pension.
Okay.
And so we've fully funded our ARC payment, obviously, and this direct supervision, I think, will be very helpful in making sure that we aren't making deposits into the wrong account. There was also a finding where we spent $5,000 on a bookkeeper and never even received the report because the bookkeeper didn't know who to send the report to the town. So obviously there were some internal controls that were missing, and we're putting those in place.
Okay, that's good. And let's go to that tornado fund.
Sure.
How are you going to handle that?
I have put $250,000 in this next budget for fiscal year 23 to start to pay down the tornado fund.
Great. So the Quinnipiac, are you having issues with them being cooperative, or?
I think we have a great relationship with QU right now. We've been working with them. They have some large scale buildings coming up next year. I am no longer requiring or budgeting for a gift.
Okay,
There's been a lot of contention about that gift over the last several years. Quinnipiac didn't like finding out in the newspaper that they were donating to the town. So we're no longer budgeting for that. And what's great is that, you know, they have a lot of building plans. So those are excellent building permits that we get to anticipate for next year.
okay. So just looking at like what you had sent us, you're referring to that in the past, the town has had an issue with overstatement of revenues.
Yes.
So how are you managing that and still, you know, getting positive results?
Well, we used 5-year actuals and anticipating our revenues for next year's budget, and took a very conservative approach. We have documentation that supports all of the revenues put into my budget. I listened to the auditor. He mentioned about the motor vehicle revenues. Those were overstated. So we've taken a very responsible approach to all of our revenues.
Has it forced you to make any compromises on the expenditure side?
We have tried to reduce our expenditures. We have a lot of contractual obligations, a lot of long-term contracts in place for our employees, as well as services, our tipping fees. Everything has everything. A lot of our expenditures are contractual, unfortunately. We've tried to reduce expenses where we can, and unfortunately, we've had to increase the mill rate. We are taking some steps, though, with our medical, which went up significantly over last year. It was underfunded in this year's budget. And so for next year, we funded it where it was recommended to be from our agent of record. We are going out to bid for a new agent of record for the first time in decades. And so we have some decisions that we're going to need to make in the next few weeks regarding our medical. And we're hoping that with these changes that we'll be able to reduce that expense and provide some mill rate relief.
And what stage are you at with your budget to, you know,
It's in front of the council right now.
okay. And what kind of power do they have?
They have several weeks to deliberate the budget, and then they vote on a budget amount and a mill rate in May. I have the ability to veto the budget. They can override with 2/3.
Can they, when you submit a budget to them, do they have the ability to increase or only decrease?
They can do either. They usually go through line by line, making changes. I think they are very responsible in their approach. They have had a few meetings to get a general understanding of where we're at. They've met with our labor attorney, so they understand all of our contracts. They've met with our purchasing agent so that they know how we're doing everything we can to reduce our expenses by looking at consortiums for fuel costs, regionalization, that kind of thing.
Okay. All right, thanks. Tony, do you have any comments or questions?
I do. Thank you. Thank you, Mayor. It does appear like you've made some progress on some of the issues we've been discussing in the past, which is great in terms of funding your liabilities and adding some staff. And according to your letter, you lowered your tax collection rate to a more realistic number, which I thought was great. Mm-hmm. So continue to resist the temptation to overestimate revenues, because that can get you into a lot of trouble. be conservative with your estimates. So that sounds like it's going in the right direction. I had a little trouble trying to find some information in your budget because it looks like revenues are by department.
Yeah.
There wasn't a schedule where I could go to and like see all your revenues in one place. So I had to like keep flipping back and forth. That could be helpful in the future. I also couldn't find any grand list information in your budget. Because I was curious to see where your grand list was at. My question is, I have two questions. The first is, do you have any plan? What are some of your plans to address some of your longer term liabilities in terms of, you have contractual obligations, but you can work on addressing some of those through contract negotiations, and whether it's healthcare, retiree healthcare, or retirement benefits or anything of that nature?
Yeah, so unfortunately, we were under 6-year contracts with our unions, which I found to be absurd. A lot of those are running out over the next couple of years. And in addition to that, there were a lot of concession agreements, which didn't really provide too much relief for the town and extended our long-term costs. And those added to the term of the contract, unfortunately. So we will have the opportunity to address some of these long-term costs within the next couple of years in terms of employees' contribution to pension, medical, as well as their gross wage increases.
Okay, thank you. And one other question, it's actually a specific question. I noticed you've budgeted for the mill rate cap at 29 for the auto cap.
I do, yes.
Yeah, and I was just curious if you ran some scenarios to, see what would happen if it was at 29 or if it was at 32 or if it didn't happen at all in terms of the impact on your budget.
Right. So we budgeted for the revenue from the state as well as the reduction of the cap. And our understanding when I budgeted for this was that it was very likely to pass. So, we still have time for the Legislative Council before they finish their budget to use the state's budget in finalizing our own budget.
That's good. So you have some time to react to what happens. It's been our experience that the cap happens, but the revenue does not. At least that's our experience. So
we experienced that several years ago as well.
Yeah. All right, great. Thank you.
Thank you.
Okay, Mike?
I just want to second Tony's comments. Good progress, and I did have that concern on the budget side from the standpoint of trying to understand the revenue structure. It would be helpful if that can be provided and incorporated into the budget going forward. And my only question was really on the point of revenues. It's great that you've adjusted to be more conservative in your expectations with your estimates. And I was just looking for confirmation as far as excluding one-time revenues. The three that I would reference is ARPA money, bond premiums, and sale of property. Are those excluded from your revenue estimates?
Yes, they are excluded. And honestly, we could have used them. So we have $4 million that we could put in the budget for revenue from ARPA, and we did not do that. We have a school that we will be selling June 1st, and we're getting $16 million for that sale. It's already been agreed to, and we are not using that revenue. We are not using any bond premiums. So, and the sale of the school, we plan to use that for some capital projects so that we don't have to take on more debt for some of the work that we need to do.
Okay. Fantastic. Okay, thank you.
Diane?
I agree with Tony and Mike's comments as well. I think the mayor is definitely on track in addressing a lot of the the estimates and making them more realistic. And I also agree with what Tony said with, looking at your contracts as you negotiate them, try and, look at the long-term, the long-term liability issues, particularly with the OPEB, because you do have quite a huge OPEB liability and an unfunded liability that's out there. So, but I think, everything has been identified, and I think you look like you have a plan to address everything. So those are the only comments, but basically in agreement with everything that Tony and Mike have said.
Thank you.
Becky?
Good morning. I would encourage you to do everything you can with the pension and OPEB liabilities to ensure that they're being measured conservatively, appropriately. There are lots of, let's say, squishy things in the current assumptions being used to calculate those liabilities. If you can't accurately measure something, it's difficult to make solid plans to address them over the long term. I'd also encourage you to spend some time on some due diligence aspects of the liability. You've made some change in how the pension administration is happening. I'd strongly encourage you to have some auditing done of the data that's used to calculate pensions to make sure it's correct, that the calculations themselves are correct. Particularly if calculations are being done by, in spreadsheets that were built into the 1980s, it might be time to update that. Doing audits on the retired members to ensure they're still living if they're collecting benefits, and to also explore whether some of the beneficiaries are still alive. That might actually shave a lot of money off the liability if you could confirm that there were some beneficiaries that have passed away. You're coming up for an experience study this year. I'd strongly suggest you undertake that. I also think with numbers this big, you owe it to the taxpayers to have valuations being done every year, not every other year, so that you can manage these programs appropriately. And when you're in collective bargaining, talking about the benefits, please make sure that you take a look at how any bargain changes will impact not just in the short term, but in the long term. It is a straightforward exercise to project both pension and OPEB liabilities and costs into the future so that you can take those into account as you are doing long-range capital budgeting. $475 million in total pension liability is probably an understatement. It's probably a number that's north of $500 million, and that's obviously an enormous number that the taxpayers will need to be grappling with over the coming decades.
Glenn?
I agree with what everybody else has said. I guess I come back to the bonding side. I've heard a lot of the word bonding with regards to getting the finances in order. And looking in, I guess the couple things that I see is usually a restructuring. And I know that the town has done a couple of them to kind of get some stability into the finances of the town. But I guess the caveat is it's always a short-term benefit, and it usually creates long-term problems down the road because it's generally just pushing it out. So the savings are realized up front, and then it's make-up time after the first few years. But what really jumped at me was the bond premiums in the general fund. I get a concern with that because generally premiums from bonds are not really meant to be squirreled away or to boost the general fund balance. There's generally IRS provisions as far as spending requirements go with regards to bond premiums. So, I see a balance out there, and I wonder what's happening with that and what the plan is with that, because, again, it's not meant to be a squirrel away fund. So I guess the question is, to boil it all down is, with that 2.9, and I think Mr. Cavaletti, I was glad to hear that he's on top, noticing this and on top of it, but what's the plan with that bond premium that's sitting in the general fund?
So that was done by the previous administration, and often they would budget for money coming back to the town for capital projects that were completed, and taking some of that money to pay down debt service. We have not budgeted for those large amounts of bonds coming back to the town. I'm sorry, what was the other question?
Well, I guess the question is what are you going to be doing with that money that's in there? You said that you're not budgeting for it, and that's fine. You shouldn't really be for
Right.
premium. But the point being is that the under the tax rules for bonds, there's generally requirements to be spending that money, not squirreling it away. So I guess my question is with that 2.9 million that's out there, what's the plan for that?
So we can use that to pay down debt, correct?
Right now, you can use it for other capital projects that have an authorization to it. You can use it to pay down interest payments on tax exempt, the bonds that created it, and the bonds that you have outstanding right now. So there is some relief in there, but it's supposed to be used.
Okay.
And generally, those requirements are, anywhere from 1 to 3 years. So when you start getting out to 4 or 5 years or whatever, frankly, I'm concerned that the IRS might get concerned.
Okay. Yeah. So we'll have to put together a plan, and we'd like to get back to you in writing.
Okay, thank you.
Thanks. Kim? Are you muted, Kim?
I am. Everybody's gonna have to read lips. I do want to say good work by the town, the mayor, and the finance group to see that it looks like we're heading in the right direction as far as budgeting is concerned. Most of the items that were commented earlier, they all took my thunder. So what can I say? That's good, right? You've already heard it. I did like to see that you're adding another person in finance to cover the hold on, bear with me, the pension side. What about the ARPA funds? Who is going to manage that? Do you have a grants person to manage those?
We're hiring a consultant to help us with ARPA.
Okay.
Can we mute that telephone? Okay.
Done. Sorry, I lost my train of thought. Mustn't have been important. Oh, so you're hiring a consultant on the ARPA side. Okay.
Yes.
Very good. And since I haven't heard about the Board of Ed, how is the relationship between the city and the Board of Ed?
We have a good relationship. I was listening to David Capoletti, and he was talking about taking some reimbursement from the grants for fringes. We have not budgeted for that in my budget for next fiscal year, but we've reduced their requested allocation. I want them to use their grant money to pay for education, and having that unreliable revenue was concerning to me, because sometimes their budgets run over with costs for special education, which obviously they have to pay for.
Yeah, there's definitely an uptick in that area for a lot of towns.
Okay, so I might not have understood what he was saying. It sounded like the town reimbursed the Board of Ed for their benefit cost?
No, we pay for the medical for the Board of Education. And so the previous administration was asking for the board to use some of their administrative fees for grants to reimburse the town.
Okay.
I found that to be risky, because if their costs ran over, they were going to pay for their costs and not reimburse the town.
Okay. Got it. Thank you. Sorry, Kim.
So they're applying an allocation fringe benefit rate is what you're doing?
So that's what they have been doing.
Okay. I guess you might want to take a little deeper dive on that to double check to see if that if it's being brought up, then maybe the allocation isn't in line. Just making sure that it's in line and that the city isn't picking it up.
Well, or if the city is picking it up completely, that's fine, but making sure that you're getting proper credit for it when you file your EDO 01.
Okay.
I think that's it for me.
Okay. All right. Thank you. And I think we really are seeing some very good progress. And, you know, I especially appreciate you know, how you're budgeting your revenues, looking at historic actuals to develop the estimates and being conservative. I think that's very important. So I think you guys are really going in the right direction.
Thank you. I also wanted to mention that we did ask for the experience study for our pension. The retirement board voted that out recently, so we'll be getting that done very soon.
Good. Good.
Very good.
Okay. Thank you.
Thank you.
All right. And last but certainly not least, make sure I am last. Yeah, Plymouth.
Hi.
Thank you for being so patient, waiting through the other communities. So I had your update just a moment ago on my screen. Looking at your budget, or no, I'm sorry, not your budget, your budget to actual as of March 31st, and you have a column for projected through June 30th. And I guess my first question is, are those for real? I'm looking at the projected numbers, and I'm seeing things like your police budget being $1 million, so almost 50% under budget. You know, some of your employee benefits being under budget by almost $500,000, your liability insurance under by $300,000. Are those for real?
Those are basically just including the current open encumbrances.
Okay, so the projected surplus of $5 million is not
really.
Okay, no. Okay. So then where do you expect to end up?
Currently, I don't have an estimate.
Okay.
I can get that for you for the next meeting. Or
yeah, because you know, just like to see, I noticed in your budget you have not in your proposed budget, I don't see that you're planning to use fund balance to offset the the budget. So that's a good thing. But it'd be nice to see where you stand with your fund balance. Okay. So let's just start up with the other board members. Tony.
That was my question as well about the surplus. So that was the only question I had.
I was believing it when I saw the medical. I was like, okay, that could be real, but $1 million under in the police department really threw me. And then there was $10 million under in the Board of Ed. So actually, let me go back one quick to that. The state grants, $9 million not yet received, almost $10 million not yet received. What is that?
That's probably primarily the ECS.
Not at all received?
Just not recorded yet. We just hired a new staff accountant, and we just got the budget approved.
Okay, but this is March, and you know, okay, I haven't been in the finance department in a few years, but it used to be like 25, and 50, but that by this time of year, you should have received 50% of that grant. Am I correct?
That's correct, yeah.
So where is it?
Well, we received it. We are behind in our, as I was explaining, my predecessor basically did things when the auditors came because she was short-staffed. So there's a lot of catch-up we're working on here, primarily to, get the audit done, and then catch up fiscal year 22.
Okay, I just find that yeah, $4 million in what I'm looking at, it should be about $4 million in revenue, more than 4 million. Is it just not posted? Is it posted to another account? I mean,
It's just not posted.
Okay. Are bank reconciliations being done?
Bank reconciliations are not current.
Okay.
Can you maybe just spend a couple minutes, talking about what the plan of attack is? We're, almost down to the last quarter for the year. Do you see being able to make up ground over the next couple months with getting the postings current, getting the bank recs caught up, to position yourself well for the end of the fiscal year?
Well, our priorities right now are to, we started getting caught up on the current year's information. My priority right now is to get through the audit, but now that I have a staff accountant, he is focusing on catching those things up.
Yeah, I would say that ought to be a high priority. Make sure the bank recs are current and that revenue has all been, and I got to imagine if revenue has not all been recorded, how are the expenses? Are there any concerns that things have not been posted?
Expenses, we should be much more caught up.
Okay.
Because our bill, we do pay our bills, and that primarily is. But yeah, no, and I agree with you completely. Believe me, I agree with you. There's only so much I can do in the few months that I've been here.
Okay.
Without staff.
I do have a concern. I mean, it was commented earlier about the balances left in some of the line items. It seems like payroll is probably not current as far as posting into the system.
Payroll's not current as far as posting it to the system. We do have the payroll entries. There were just some issues that they weren't correct, so we couldn't post them, and working out those issues have been taking a little bit of time. But we are current through December.
So your payroll postings like by journal entry, or is it not automatic posting by your system?
It's by journal entry. We upload like half the entry from ADP, and the rest of the entry is manual.
Okay. Okay.
Are you referenced having an additional accountant? Are you trying to bring on any additional staffing or support?
Not at the moment. We've gone a long time without staff, and I wanted to be conservative and, see if we can just do it between myself and the staff accountant.
Besides yourself and the staff accountant, have you got, what else have you got for staffing?
A payable/payroll clerk.
All right. So, going back to what Mike said, the plan of attack, I guess I'm wondering, like, what's your first priority? What are you trying to attack first? Get the revenues recorded, or
Get the bank recs up to date, which would get the revenues recorded, as well as get the audit done.
Yeah. I find it really concerning that these holes in the revenues being recorded. Really very concerning. Diane?
Yeah, so Kate, I do echo everything that you just said because Plymouth has been with this commission for a while now, and they had made a lot of strides in the past. And I just feel like it's going backwards. And I know, Grace, you've only been there a couple of months, but it does not sound like there's enough staff to keep on top of this. Very concerning that bank recs are not done, revenues are not posted. We're given a report here, and it really is not up to date for us to make some good judgment as to what's happening. But I think that's what I'm most concerned about is, like, in the past they had made a lot of strides to bring everything in line, addressed a lot of audit comments. The audit's still not done for 21. We only have an audited results here. So I think we need to have some sort of a formal plan of what is the plan going forward for Plymouth to address all of these issues and to get back up to par from where it was a year or so ago.
Diane, I'm not quite sure when you're saying that they were up to date before with my predecessor. When I came, the 2021 bank recs weren't even done, and now they're done. And the auditors have told me that they're, done with cash for the most part.
Well, it just seemed.
I'm not sure where you're saying that.
Right. So it just seemed over the last year or so it has been falling behind, I guess. I don't know if, and again, it's not a reflection on you. I know you're trying to get caught up, but I know Plymouth had made a lot of strides in the past with this commission. So I think just to get a plan in place as to what is going to be done as far as staffing levels and to address, getting ready for finishing the 21 audit, but as far as also getting forward and doing the 22 audit. Because it is hard to get caught up once you do get behind.
Mm-hmm. I understand that. Yes. Yeah. And I agree with you.
Yeah, I think, I would like to see an action plan giving us dates on things like when you'll be caught up with revenue recording, when you'll be caught up with bank reconciliations. I mean, what was the last month that was reconciled? Do you know?
Completely to June 30th, 2021.
Okay. Yeah, so I would really like to see a plan that gives us an estimate of, when each month will be reconciled, to get back on track, when the revenue will be recorded.
Well, one issue we also have with the bank recs is the town of Plymouth seems to have
a lot of bank accounts.
A lot of bank accounts, and that is something that is on our agenda to reduce the number of bank accounts that we do have, so that the bank recs aren't such an issue.
Yeah. Understood. Okay.
We only have the bank accounts that we need.
Yeah.
But again, in the 4 months that I've been here, we got the budget approved. That's been a big thing, and now are moving the focus to getting the 2021 audit done.
Yeah, but honestly, without bank recs being done, without revenue being reported, you don't know if money's missing.
I know. It concerns me. It does concern me.
Yeah, it should. Becky or Glenn, Kim?
Definitely.
This is Becky. Just for the record, we provide actuarial services to the town of Plymouth. Okay. I don't have anything additional to add.
Glenn?
I would just echo what you, Kate, and what Diane said. And I think having something with, if you want to call it like milestone dates, because catching up usually takes a little bit more of a push than staying on time. So I think kind of having, somebody said action plan or such, but I think having that would really be helpful trying to catch up, because time keeps marching on and keeps adding to the workload, regardless. So I just think that's a good idea.
Well, yeah, I mean, that's what the new staff accountant is focusing on.
Yeah, and I think if if you put that together, it gives you a deadline to focus on, and by sending it to us, and I mean soon, not waiting until our next meeting, put that together, give us your plan, and that helps us help you by holding you responsible for that. Kim, I know I'm
Yep.
certain you have comments or questions.
I would, you say you have 3 positions total for the office. I know that there was, you're dealing with the turnover, but in addition to that, I believe you had somebody out on medical, which was the payroll AP person. And I remember your predecessor telling us at one of the meetings that she had to literally do payroll and AP because of a vacancy, a medical or a turnover. I don't really remember. Are all of the positions fully staffed, or do you have people that are out?
Currently, everybody's here.
So then I would recommend that I think it would be a benefit if you brought on extra help right now, some temporary assistant for another financial staff accountant, so that you have one getting you caught up all the way in bank recs, and somebody else is focusing on all these journal entries on top of that, because you're coming into another year and you're already behind. You need more hands and more horsepower as well, I'll say, because you're firing on less cylinders than you need. So I would say that you need to get that boost of catch up. You need the staff.
I totally agree with Kim. Getting somebody in there to, even if all they focus on is getting your bank recs up to date, even if, the smaller ones, the bigger ones, that will take a load off of the rest of you. Because, there's something like the behinder you get, the worse it is.
It
It's
is.
just so hard to climb out of that backlog.
And it also causes burnout. So you need to spread the love, as I'll say.
Yeah.
You need somebody else to share that love with.
You can't be spending your entire life in there trying to get caught up. It'll be no good for you, and no good therefore for the town. What do you think the chances are that you'd be able to get some additional help?
I'd have to discuss it with the mayor, and I'd have to say that he probably would be on board for it. I just would have to see how much wiggle room we have in our budget, which I think we might have a little bit. I mean, we did have a temporary person here to catch us up for 2021. And once we hired the staff accountant, we let him go. But
yeah, I would really look back at that, revisit that.
Okay.
Kim,
You'll feel a lot better if you were able to get caught up sooner than later. Because you need to be able to have your hands around these numbers.
Okay. I also want to address, Kim, you made a comment about that in the past, our payroll person was out.
I don't remember exactly what position was. I was either payroll or it was AP, and somebody, I know that in the past that somebody had to step down and do work, and I think it was an office of 2 is what I can recall versus the fully staffed office. And I do recall that I think a position got cut. That's all I remember.
Yeah, they did combine the AP and the payroll
Okay.
before I got here. But
Okay.
we are training the staff accountant as well to be a backup on payroll and accounts payable for any emergency things while if the AP payroll clerk gets sick or is on vacation or
Exactly.
Yeah. So he is being trained for that
Okay.
as well.
Okay. Anything else?
I just want to comment that, I wanted to make you aware that, as Diane had mentioned, Plymouth was focusing and moving into the right direction, and we were getting our monthly reports on time, and they were providing us with proper analysis. And so I would probably say you are on the road to recovery, but it feels like the change in administration, we're backsliding, and I understand that, and the changing in staff. But I do think that you want to jumpstart this back up again and get back to where you were.
Okay. Yeah, I mean, there was a short time that there was no director of finance, and I stepped in and without anybody to show me, and I'm trying to, and the budget, like I said, came up, and
sure,
the mayor felt that was the priority to get. We have a very short window to get the budget to the Board of Finance. Not that this board is, this committee is, not important as well. We have a lot of respect for this committee. But yeah. So, I mean, the first month it was like I got the information that day that it was due. And the
understand.
second month was the budget that I wasn't able to get the reports to you.
Has the budget been adopted?
Yes.
Right. So I was quickly taking a look at the schedule, and a couple things. It looks like you've gone through reval, so there's been some definite growth in the grand list, and the mill rate's coming down by about 4 mills in change. But your new mill rate at 36.34, if the state adopts the mill rate cap of 29 on the motor vehicle side, it's something that I just wanted to put it on your radar, that it's something that you may have to deal with from an adjustment standpoint, as far as the mill rate for next year on the motor vehicle side.
Yeah, we expect it to be an unfunded mandate when we budgeted accordingly.
But you're showing an increase in your motor vehicle taxes.
That's due to the valuation.
Okay.
Motor vehicle values went up.
Did your mill rate go up or down with the reval?
No.
We reduced the mill rate, but the taxes have increased.
Okay, but you think your motor vehicle went up that much? The valuations went up that much?
Yeah.
Okay.
Yeah, and we kept the collection rate very conservative until we can see, post-COVID collection rates. The actual ones, we're not going to bring up our collection rate for the budget.
Okay. And I know this is yet to be resolved, but what you're saying is your thoughts at the moment are that this would be an unfunded mandate, so you would issue your motor vehicle tax bills at the higher mill rate of 36.34.
That's what their budget calls for.
Right. Okay.
We also have the supplemental motor vehicle taxes of 400,000.
Okay.
Budgeted.
Right. So we have a low mill rate, so we never get caught up in that state's the motor vehicle mill rate issue. Can they issue the mill rate, the motor vehicle taxes at the higher mill rate if the state puts in that cap?
I don't know. I would, if the state's ultimately going to fund the differential, I would think they would probably, I would think they would have to issue the bills at the 29 mil rate. That's ultimately the number. So I just, I don't know what action would be required of their legislative body, but I would just suggest holding off on generating your tax bills as long as you can. The legislature is wrapping up on May 4th. So it's not going to leave a lot of time, but we should know definitively by May 4th what's going to come of the mill rate cap.
Okay. Is there anything else for Plymouth? All right, then. Thank you very much, Grace. If you could work on that plan of action and send it up to Bill and Kim at OPM.
Okay,
Just
the
to give
mayor
us-
is out this week, so I will talk with him next week and work on that plan of action.
Okay. Okay, thank you.
Thank you, Grace.
Thank you.
You're welcome.
Okay. Going back to our
Agenda.
Other outstanding municipal audits.
Bill.
We have 27 municipalities that we're still waiting on their June 30th, 2021 audit reports.
Yep.
And we
Is
just,
that an unusually large number?
it's a little bit larger than in the past.
Okay.
But as you said, this year may be an anomaly. We do have a list of our, like, the frequent, more
flyers?
frequent.
Yeah.
And so these are the more frequent that are still outstanding.
So they're still outstanding for 2021,
Yes.
but everybody's got their 2020 ins.
Yes.
Okay. All right. I guess just keep us posted on that.
Yeah.
And legislation update.
Just wanted to bring to your attention, we have not heard yet where the bill stands as far as getting to the floor, but it has been approved from the House through the Senate. The Senate then had kicked it over to actually, I think it is right now, and I think Julian's on the line. It's with legislative research and the Office of Fiscal Analysis. But that is the last update that I am aware of. But so far, it has made it through everybody.
And this is for?
That is the MFAC and the MARB changes. Yeah. Yep.
Okay. All right.
And that's it.
Okay. So if we want to recommend that one of our communities goes to the MARB, what process does that, what's the process we have to follow on that?
Can I have us do a little research and get back to you? I'm not prepared for that answer myself, and I don't know if my team is.
Okay. Yeah. So if you would, because I think we need to give that some consideration.
Sure. Will do.
All right. When's our next meeting? June 28th or 29th?
Yeah.
I know I told somebody I couldn't meet with them because I had this.
Okay.
Yeah, if you guys could have that
for the next meeting. We'll send it out to you beforehand to the commission.
Yeah, please. Yeah, because I think
we'll do. We'll take it under consideration for the next agenda.
Yes, please.
Okay.
Okay. All right. Anything else? Anybody? If not, can I get a motion to adjourn?
So moved.
Second. It's Kim.
All those in favor?
Aye.
Aye.
Anybody opposed? I didn't think so. All right.
Thank you.
And we stand adjourned. Thank you very much.
Thank you. Bye-bye.